Thank you so much for joining us on the Dwellynn Show. I'm your host, Ola Dantes. I've got an incredible, amazing guest with us today, Heather Dreves. Hey, Heather, how you doing?
I'm doing great. Thank you for asking, and thank you so much for letting me be a guest on your show.
My pleasure, my pleasure. So yes, let's kind of jump right into it. Can you kind of tell the listeners a little bit more about who you are, what you've been doing, and kind of what you've been up to lately, actually?
Yeah, absolutely. So my name's Heather Dreves. I am with Secured Investment Corp, and we're a very unique company. We are very broad and organic in the sense that we create a lot of our own deal flow, our leads, our clients that we work with. But essentially what we do is we are a private lender. And so we help provide funding to active real estate investors that are either refinancing or purchasing investment properties. So we create short-term debt for them. And then on the back side of that, the more passive side of the business, we have a lot of investors that, some of them have been active real estate investors in the past, or they're just looking for something very passive that's more of an alternative asset class. And so these investors like assets that are backed by residential real estate. And so we provide investment opportunities through 2 real estate funds that we manage, and then we also sell trustees. So we really can kind of cater to everyone. If it's somebody that's more active that's needing funding for their deals, we can help with that. But then on the other side of it, again, if it's somebody more passive that is just looking to really deploy capital and not really have to worry about it and deal with tenants and toilets, we can help in that aspect also.
Yeah, I mean, I think kind of let's just go back a little bit. Just kind of talk a little bit about, yourself and how you go into the real estate world and, working for a secured investment corp as well. Just kind of curious how you got to your role today.
Yeah. Well, I've been in the private money lending industry for just about 18 years now. But, I grew up around real estate. My parents were active real estate investors, and my dad was retired military and then went into more of the corporate world. But my parents, growing up, looking back at it now, were always active in real estate. My dad had bought a lot of land in the past and done very well with that. And so, growing up around it, I saw the opportunity. And then being exposed to the private lending world, I saw how you can actually take advantage of that opportunity. I think a lot of people think that the only way to take down real estate is go through traditional banks and sources like that, which, as we all know, are very restrictive and, at many times difficult to work with. But being exposed to the private lending world 18 years ago, it was very eye-opening to me that, the hardest and the biggest challenge is finding the deal. That the funding is easy. It's really finding the right deal, making sure that the numbers work. And so, being exposed to that showed me that, the world is really kind of limitless. The deal flow is the biggest challenge. And so I'm an active real estate investor myself. I actively manage our real estate fund that we manage here at Secured Investment Corp. And so, through my relationships that I've gained through the industry, I've been able to fund a lot of my own deals, but then also help my clients deploy their capital and create wealth for themselves and their families.
No, thank you for sharing that. I really appreciate that context. So if somebody's listening to this and they're thinking, well, I have a deal, I think I have a deal, or, I get a bunch of deals, maybe it's a renovation, like a flip project, or maybe it's a larger deal. Kind of as a fund manager, what are you looking for when I'm sure you're going through, hundreds and hundreds of deals. How do you find a good one?
I think what sets us aside is we see 2 sides of it, right? We have our borrowers, and then we obviously have our investors that are in our funds that we have, an obligation to, do what's in their best interest as a fund member and yield the fund the highest returns that they can get. But as a company and as a fund management team, we also want our borrowers to be successful. So when we look at a deal, obviously there's, the general things that everybody looks for. What is somebody's credit like? What is their financial situation? We don't have minimum credit scores, but we want to look at the whole picture. And the reason that we dive so deeply into the actual borrower and the person guaranteeing the loan is that we want to make sure that they're going to actually be able to get out of the deal. Can they service the debt? Are they going to be able to make their payments? Are they, getting into a rehab project over their head? I think that with the internet and TV right now, they make rehabbing look so glamorous and that it's so easy. It's not. My husband and I have done it, and I said, I thought this was like Chip and Joanna. This isn't as fun as I thought it
I'm
would
laughing
be.
in the background, yeah.
Because it's hard. And so, I mean, as a fund management team, we've turned deals away that we've told people, this is way too big of a project for you. You don't have experience and you're not going to make any money. And, we've had people that get upset at that, borrowers, but at the end of the day, they'll come back and say, you know what, thank you for telling me that. And I'm so glad I didn't get into that deal. So we want the borrowers to be successful, but, on the fund management side of it, we want to make sure that the asset is there. Is there the equity in that deal that in the event that we have to step in as a lender and take a property back, can we get out whole and still make the fund money? And, that's the risk in this industry, right? Not everybody's going to pay perfectly. You might have to foreclose. And so we have resources and processes and procedures in place internally to handle those kind of situations. And so it's two-sided. Is it a good deal? Can this borrower make money and get out of it? And is the asset there that in the event we have to step in, that us as a fund management team can take it over and still make money and get out whole? Those are the two most important things that we look at when looking at deals.
So when you talk about setting up a fund, a real estate fund, so like you said, you've got your fund members and then you've got those active investors. So typically it just sounds pretty complex. So can you give us like a quick summary of how you put these funds together? Do you have to get the SEC involved? What does that process look like?
Well, it's really kind of determined by what type of fund you open. I will tell you a little history on us. So 10 years ago when I came on board with Secured Investment Corp, I dialed for dollars, which meant that a borrower would apply for a loan. Our underwriting team would do their due diligence. Once it checked all the boxes, I'd get on the phone and start calling clients, which was great. We were still able to fund a lot of deals, but it was a clunky process because borrowers are wondering, well, my deal got approved. Why do I have to wait a week? And I'm working with people. A lot of our clients use self-directed IRA accounts to fund deals. I don't know how much you know about those, but they take time. They're not an overnight, hey, wire the funds. You got to submit it. And so we really wanted to figure out a way that it was an easier process for our borrowers as long as the deal, fit our box. And then we also had a lot of investors that didn't really want to take the risk on buying trustees. They said, I like the asset, but I don't want to deal with someone if they don't make their payments. So the funds were a natural progression for us because it's still the same asset, it's still the same risk, but the difference is we manage it all. They don't have to worry about it. We can close quick for our borrowers. So when you ask the question like what is the process of opening a fund, it really depends on the fund. We have two funds. One is for accredited investors only. Yes, it is registered with the SEC, but that one technically is an exempt fund because we only let high net worth individuals into it. That fund has been in existence with us for 8 years. And that you just file your exemptions. Obviously, there's a lot of legalities, audited financials. We have an auditing firm come in once a year and do audited financials. And that's in the best interest of our fund members and us. It shows our fund members that a third party is coming in, watching over us, making sure that we're good operators, right? But we actually have a fund, which is really exciting, that's open to everybody. And it's called a Regulation A+ fund. And it is very highly regulated by the SEC because of the fact that non-accredited investors can actually invest into it. So there's quarterly reporting, there's yearly reporting, it's audited on a yearly basis, and we have to reapply every 5 years. So it's very regulated and simply for the fact that non-accredited investors go into it. But it's pretty exciting because you can actually invest in that fund with as little as $1,000, which is really unheard of in the real estate fund world out there. Usually it is high net worth, a minimum of 50,000 or even more than that with some other funds. So there's a lot that goes on to managing a fund. We have a whole accounting team, we have a compliance team, we have a legal team. But again, it's a really good opportunity for people that want to really invest in residential real estate assets, but not get their hands in it, not deal with tenants and toilets and rehabbing houses. So it's been a great option for our clients that don't want to be quite as active.
So if I'm one of such clients and I'm listening to this and I'm thinking, well, I do have a 401k or IRA, self-directed IRA, and I don't want to get my hands dirty and I just want to get a good return. You in your world, you guys talk about first lien positions, right, on this note. So can you kind of just walk us through, a client thinking, well, if I invest my money and, this person can, repay part of, that money, like what happens? Can you kind of walk us through how you guys mitigate such risks?
So one of the things that we do to mitigate those risks is we actually service all of the notes internally. So you can, you have options when you're lending money. You can originate and outsource servicing. There's lots of servicing companies out there that will collect payments and whatnot. And we've tried that. We were never very successful with finding a good partner to do that. So we actually built our own servicing team internally. And so the benefit to that is we know exactly what's going on with those accounts. We meet on a biweekly basis. We're all under one roof here. So we service probably about 450 notes right now. But we have strong beliefs and procedures with that department. So they do have 5-day grace periods. And then at 30 days late, if a borrower is not contacting us, we will get a hold of the lender and say, hey, so-and-so's not made their payments. We can't get a hold of them. Here's what we would suggest you do. And a lot of people really like us just to guide them along, and they have to approve it. As a lender, you have a first lien against the property. That is your security. You are the lien holder in the bank, which gives a lender the legal right, whether it's our fund or someone that buys our trustee, the legal right to foreclose. I mean, to be honest, foreclosure is the last thing we want to do. However, if a borrower is not communicating with us, if they're having challenges, then we will encourage lenders to let us foreclose at 45 days late. And it honestly, typically, it usually gets someone's attention real quick. Oh gosh, yeah, I didn't make my payment. It's like, yeah, I know, we've been trying to call you for 45 days. But the other thing it does is, and I've been doing this a long time, the properties that we take back quickly, we are much more successful on than the ones that we limp along, meaning, we try to work with the borrower and, they give us every excuse in the book, and 6 months later, we're still, have a defaulted note. So we will start foreclosure quickly. You probably know this, foreclosure is a little challenging right now with all the moratoriums. They are starting to lift, and what we do is different because we don't do owner-occupied financing. These are all investment properties, which technically make them commercial loans. But we will start foreclosure quickly, and we do that all in-house. We're not attorneys, but we will outsource to attorneys in all these different states that we lend in, and we'll get the process going as quick as we can. And more often than not, borrowers will call back and, oh, I'm going to bring it current, or I'm paying it off. So it's very far and few between that we actually foreclose on, but we also take that very seriously too. And I think that's how we mitigate it. We're not playing telephone with the servicing company that's trying to service it and, well, what's going on? We know exactly what's going on with all of our accounts, and we will act very quick if we have to.
So before we kind of go into a case study of a deal that you just lent them recently, you always talk about kind of the future of real estate or just the markets in general. So I just kind of want to get a sense of what your thoughts are on just in general, just the real estate market.
Yeah, well, I mean, I think it's interesting times, right? Markets have been hot. We have started seeing them cool off. I will tell you, one of the things that we practice here is we only lend money and we only buy properties that are going to resell under the FHA cap. So we are not investing in high-end homes, jumbo home loans, because we believe if you're under that FHA cap, your database of buyers for those types of properties, if you have to exit it, are much greater than once you get up above that FHA cap. Not as many people qualify. We stay in the affordable housing market is where we stay. And we encourage our borrowers to do the same thing, because when markets shift, it's not if, they are shifting and they're going to shift. We believe staying in the residential affordable home market space gives you more options. I don't know how it is in Houston, but at least where we are, there's a huge shortage of rentals right now. And so we've actually found houses that we've bought to invest in with the fund that we were originally going to resell. We're actually renting them now because the return on investment is much higher because the rents are so great. So, we think that encouraging our borrowers to do the same thing, if they get in if they have a bind and they can't sell the property, if that was originally their plan, they could potentially cash flow it and still service the debt. So there's, opportunities to pivot when markets shift. And we think they are. We do focus only on the residential space because that's what we know. That's, we've decided 10 years ago when I came on board, our lane was residential real estate. It's not that to say that there's not lots of opportunity in others, but that's what we're experts at. So we really just focus on the residential space.
Fascinating. All right. Yeah, let's jump into a case study of, a deal that you guys funded. Maybe just give us a little bit of a background of that particular deal.
Sure.
It could be the one that you guys made the most, or the active investor made the most money.
Well, I think there's lots of different examples of that. Our fund actually does buy real estate in addition to lending the money. We had a deal last quarter that we bought a property and our ROI on it, after we sold it, it was wholesale, meaning we went in, cleaned it up, did very minimal to it. And we do everything from wholesale to, more retail where we'll go in and do more rehab. But our ROI on that, we held it for 6 weeks, came out at 74%. And wow. So that was a great investment for us. Our market is very hot right now. But we've had some recently where so one of the things is we used to always buy real estate through the foreclosure auction. And now because foreclosures have been stalled, obviously there's not that option. And so one of the areas that we've really found a lot of opportunity is distressed landlords. And these are small mom and pop, they own 2 to 3 rentals. Well, as we all know, renters now are not forced to pay, right? They can stay there. It's very difficult to get them out. Well, we have bought some rental properties with unpaying clients and, taking them off the hands of these landlords, which is great. They get their cash. We buy these properties, and we've actually been able to move these tenants into some other like multifamily 4-unit properties that we have that have some housing assistance. So we solved their problem. We got them some housing assistance. We got them out of the property we bought, and then we're able to resell the property. So we don't want people to think we're the big bad fund managers that are trying to buy everybody's properties that, are in trouble. But we've been able to actually help move these people and place them in, more Section 8 HUD homes, where they're getting some assistance and keeping a roof over their head. So that's something that's been pretty exciting lately. We actually just took back a property in Louisiana that's been broken into 3 times in 2 weeks. So that's super exciting. To be continued. I'll let you know how that one plays out. But apparently it's not in a very nice area. And now someone is broke into it and now locked it from the inside. So now we are having to have the police go out. So I'm sure we'll be fine, but I'll probably have some good stories about that one.
I'm pretty sure you will. I'm pretty sure you will. Well, we're definitely dwelling into the quick rounds. These are going to be quick questions, quick answers.
Okay.
You ready?
Yep.
All right. First question. What makes you either unique? What is that differentiating factor that separates you from the next girl or the next guy?
I think that, what makes me unique in this industry is I started from the ground up. I started as a loan officer's assistant in the private money industry, and I have done everything from that to originate, to escrow, to servicing, now into the fund management position I'm in. And so I think that's unique, and also the fact that I also invest in real estate, and I've seen the side that our borrowers see. For a long time, I was very jaded to our investors. I take my job very seriously, but when I actually jumped in with both feet and actually started investing in real estate, I was like, whoa, this isn't as easy as everybody says it is. So, the fact that I just I really did start from the ground up and have pretty much done every position available in this industry. Just makes me, pretty well versed, to be a fund manager.
Sweet. All right, next question. What was the last book that you read, and what was the one thing you picked out from that book?
Well, the one that I just read that I really took a lot from was Atomic Habits. And I'm a strong believer in that anyways. I was a college athlete, but it just reiterated the importance of having habits, and just how, one, it takes time to change those, right? It's not like it happens overnight. And it was eye-opening to me. It made me tune into the habits I actually have, the good and the bad, and just being more mindful and intentional with what I'm doing. I enjoyed that book.
Awesome. Final question. You're busy at work, funding deals. What do you do for fun?
Well, I've got 2 boys. I have a 23-year-old fireman, and our younger son is a college soccer player. And we have a lake place, and we spend a lot of time in our boat and on the lake with our kids. And I guess family time is really what I enjoy and do the most of when I'm not at work.
Yeah, I can kind of relate how the two goes. Yeah. So if there's someone listening and thinking, wow, I really like what Heather's talking about, I want to get connected with, your firm and what you guys do,
Sure.
what's the best place people can reach out, get to know more about you?
Absolutely. The best place to go to is our website. It is securedinvestmentcorp.com. So no plural, securedinvestmentcorp.com. They can actually schedule an appointment with me on there. We've got information about our funds, our trustees. If they're looking for funding for their projects, just go to the same website, securedinvestmentcorp.com, and I'll get them to the right person. And I'd love to talk with them about, our funds. We also have a lot of information about rolling accounts, IRAs, 401ks over to self-directed custodians. That's something that's very popular with our clients, so we'd love to give them some more information about that.
And you guys fund projects across the US?
Yes.
Awesome. Well, Heather, really appreciate your time today. Thank you, thank you, thank you.
Absolutely. It was a pleasure. Thanks again for having me.